Rezolve AI PLC, trading under the ticker RZLV, is currently experiencing significant market activity. As of the latest check, with live trading ongoing, the stock is priced at $6.26, reflecting a decrease of 4.50% in the current session. This move is happening on a substantial trading volume that is already outpacing its average, indicating a high level of investor interest and conviction on both sides of the trade. While the immediate intraday chart shows a bearish sentiment, what's truly captivating is the backstory that this simple price point doesn't tell you. The market has been buzzing with expectation, fueled by a narrative of explosive growth in the artificial intelligence e-commerce sector. However, the reality of Rezolve AI's current standing is a complex tapestry of ambitious forecasts, clashing with tangible financial metrics and recent controversial events that demand a much deeper look. The common belief circulating among many retail and even some institutional investors is that Rezolve AI is on an unstoppable trajectory. This view is largely propelled by the company's own aggressive guidance and a series of optimistic analyst ratings. The company recently shattered expectations by raising its 2025 annual recurring revenue, ARR, to a minimum of $150 million, a significant leap from previous forecasts. Even more audaciously, they've initiated a 2026 ARR exit rate target of a staggering $500 million. This has created a powerful narrative of a small-cap company poised to capture a significant share of the AI-powered commerce market. 6 equity research firms have recently raised their price targets, with some reaching as high as $15, adding fuel to the fire and reinforcing the expectation of massive upside. This is the story many want to believe, a classic David versus Goliath in the tech world, with platforms like Robinhood, SoFi Invest, and Fidelity seeing a surge in retail interest for the Rezolve AI stock. However, when we peel back the layers of this compelling narrative, a more nuanced and potentially unsettling reality emerges. While the ARR projections are certainly impressive, the company's actual reported revenues, though growing, tell a different story. In the second quarter of 2025, Rezolve posted revenues of $4.88 million, which was a significant miss of 27.7% against a forecast of $6.75 million. This discrepancy between future promises and current performance is a critical point of tension. It raises questions about the company's ability to convert its pipeline into tangible, GAAP-recognized revenue within the projected timelines. The stock's reaction to this news was paradoxical. It rallied, suggesting the market is currently weighing future potential much more heavily than present-day financial realities. This is a dangerous game for investors, as sentiment can shift in an instant. The trading on platforms like Interactive Brokers, known for their sophisticated clientele, shows a more divided stance, with significant short interest building up as some professional traders bet against the lofty expectations. The daily trading action in Rezolve AI stock has been nothing short of volatile. The stock has seen wild swings, often on high volume, indicating a battle between bullish retail sentiment and more skeptical institutional players. For instance, in the last month, the stock has seen a significant run-up, gaining over 33% in September alone, partly driven by a series of non-deal roadshows aimed at attracting institutional capital. However, this bullish momentum was sharply challenged by a scathing report from short seller Fuzzy Panda Research. The report alleged that Rezolve AI is not a true AI innovator, but rather a repurposed mobile-related company that has opportunistically rebranded itself. It also questioned the substance of its much-touted partnerships with giants like Microsoft and Google. While Rezolve AI vehemently denied these allegations, the report injected a significant dose of skepticism into the market, and the stock has been trading with heightened volatility ever since. This is a classic expectation versus reality scenario playing in real time. The expectation is that of a groundbreaking AI company with deep-rooted partnerships. The reality, as presented by the short seller, is that of a company with a less glamorous past and potentially superficial alliances. From a technical standpoint, the stock is at a critical juncture. After a parabolic rise, the recent pullback has brought it to a key support level. The high trading volume on down days suggests that some early investors may be taking profits, while the dips are being bought by those who still believe in the long-term growth story. The institutional ownership, while growing, is still relatively low, at around 8.19%, with hedge funds holding about 5%. A significant portion of the company, over 30%, is still held by individual insiders, which can be a double-edged sword. While it indicates that management has skin in the game, it also raises the possibility of insider selling pressure in the future. The significant share dilution over the past year, with a 74.9% increase in outstanding shares, is another red flag that investors who are only following the hype on social media might be missing. For those considering an investment in this name, it is crucial to look beyond the surface-level narrative and analyze these underlying factors. Comment below with your thoughts on whether the recent short seller report has changed your perception of Rezolve AI's future. Now, let's delve into the core of the company's business. Rezolve AI operates in the burgeoning field of AI-powered e-commerce. Its flagship product is the Brain Suite, an enterprise-grade AI platform designed to create what the company calls agentic commerce. In simple terms, they aim to provide AI agents that can autonomously handle the entire shopping journey, from product discovery to payment and fulfillment. The technology is designed to integrate seamlessly into existing mobile apps and websites, offering features like visual search, where a user can simply point their camera at an object to initiate a shopping experience. The company's partnerships with Microsoft Azure and Google Cloud are positioned as key enablers of its global expansion, providing the necessary infrastructure to scale its operations. Rezolve AI also boasts a client list that includes major brands like H&M and Ferrero, which lends credibility to its offerings. The company's long-term vision is to become the indispensable infrastructure for the age of AI-driven commerce, a multi-trillion-dollar market. This is the foundation upon which the bullish expectations are built. For investors looking into online investing, the allure of a company at the forefront of such a transformative technology is undeniable, and many are using Schwab Intelligent Portfolios and other robo-advisors to gain exposure to the AI sector. Looking ahead, the future of Rezolve AI is a high-stakes game of execution. The company has laid out an ambitious roadmap, but it is now faced with the monumental task of delivering on its promises. The key catalyst for the stock in the near term will be its ability to demonstrate a consistent and predictable conversion of its ARR into reported revenue. Any further revenue misses could severely damage investor confidence and lead to a significant re-rating of the stock. The planned launch of a crypto payment infrastructure is another potential catalyst that could attract a new class of investors and open up new revenue streams. However, the path to profitability, which the company projects for the first half of 2026, is still a long and uncertain one, fraught with risks. The competition in the AI e-commerce space is intensifying, with both established tech giants and nimble startups vying for market share. Rezolve AI will need to continue to innovate and differentiate its offerings to stay ahead of the curve. The outcome of the battle between the bullish narrative and the underlying financial realities will ultimately determine the long-term trajectory of the Rezolve AI stock. In conclusion, the story of Rezolve AI is a perfect illustration of the tension between market expectations and corporate reality. On the one hand, you have a company with a visionary product, a massive addressable market, and a set of audacious growth targets that have captured the imagination of many investors. The narrative is powerful, and the potential for exponential returns is undeniably alluring. On the other hand, the reality is that of a company with a history of significant losses, a recent revenue miss, and a valuation that is heavily predicated on future success. The recent short seller report has also cast a shadow of doubt over the company's claims. For investors, the key is to look beyond the hype and conduct their own due diligence. The journey for Rezolve AI will be a volatile one, with significant upside potential for those who are right, but also substantial risk for those who are caught on the wrong side of the trade. The coming quarters will be crucial in determining whether the company can bridge the gap between its lofty ambitions and its on-the-ground performance. This is not a stock for the faint of heart, but for those with a high risk tolerance and a deep understanding of the AI sector, it is a name that will be impossible to ignore.